Friends, all of you know that after the last Monetary Policy Committee's meeting held on 30th September 2022, fixing repo rate at 5.90%, most of the commercial banks, including cooperative banks, regional banks, have increased rate of interest on fixed deposits. The increase was to the extent of 1 to 1.5% for a period applicable for 5 years and above. This is an average rate they have increased. In fact, they had not sufficiently passed on the benefit to the fixed deposit holders for a long time, in spite of increasing the rate of interest on their loans. And that is why probably you have seen a robust growth in profit in the second quarter in banking industry. Now, approximate rate of interest applicable on fixed deposit for a longer period is approximately 7 to 7.5%. The basic intention of this video is to explain you as to why we are expecting further increase of rate on fixed deposits. What are the basic reasons? And if that be the case, what should be our strategy in respect of funds which are already available to us and meant for keeping in a bank by way of fixed deposits? Friends, before we come to the real areas of discussions, I would like to explain you why interest is paid. Many of us have a wrong thinking about the concept of interest. Normally we feel interest is paid to take care of our future, to take care of our retired life, to take care of our superannuated life, etc., etc. But this is not the real cause of making payment of interest. There are three major reasons for which interest is paid. Number one, it protects inflation. If the property value is 100 today, and if the price increases to 110 after a period of 1 year, same property, then your 100 rupees value today is losing its value to the extent of 10% after 1 year. So in order to support and protect you from loss of money due to inflation, bank gives certain amount to you in the name of interest. So you have given 100 rupees today, and after 1 year you are getting 100 rupees, but that time the value of 100 rupees has come down. In order to protect it, bank gives another 10 rupees or 8 rupees or 7 rupees so that you are protected from inflation. That is the main reason for making payment of interest. What is the second reason? Second reason is that you are giving money to X, Y, Z, and there is some amount of risk. There is some amount of risk. Even if you keep money in a nationalized bank or a private bank, they give you a guarantee to the extent of rupees 5 lakhs. So therefore, giving money to any institution bears some amount of risk. And for risk there is a cost. Why should I give money to you if there is a risk? So you give me in return some amount of consideration, and that is also a part of interest. And what is the third reason? Third reason is that you are keeping money in a bank, say for a period of 1 year. Therefore, you are accepting certain amount of sacrifice. What sacrifice? That you will not use that 1 lakh rupees for a period of 1 year, in spite of having your requirement. So that is some amount of sacrifice. So there should be some cost for that. So interest is the combination of three factors. 1, inflation. 2, cost of sacrifice. And 3, cost of risk. The factors of all these is converted into a percentage which we normally call as interest rate. Friends, let us now come to our real question. Question is, how I am expecting that the interest rate on fixed deposit will further increase? Is it just simply a statement, or it is a statement backed by a solid logic? As you have come to know, that inflation is one of the most important factor for making payment of interest. Now, what is the inflation rate today? The latest information report, which has been published only yesterday, that is October inflation. When we talk inflation, we talk about CPI, Consumer Price Index. It is 6.77%. It has reduced. If you compare it with September, in September the figure was 7.4%. But inflation is still 6.7%. Now, Government of India has a dedicated decision to keep the inflation below 4%. What is the exact term? 4% is our target inflation plus minus 2, which means it can go up to 6% or it can go down up to 2%. But target is 4%. So therefore, if you consider or compare the target versus actual inflation, it is still very high. And it is an accepted practice being followed by all central banks, not only Reserve Bank, all central banks, that if there is an inflation to the higher level, the best medicine is to increase the interest rate. Increase the interest rate means increase the interest rate on borrowings. So therefore, we are expecting that although the repo rate is today 5.90% as fixed in the last MPC meeting, but we expect at least another 25 basis point increase in the December meeting. So, main reason in support of our justification is that inflation is still above the target limit. That is number one reason. Second most important reason is that demand versus supply of money. As you know, banks invest money with various companies in the form of giving loan, overdraft, etc. Not only company, individuals for housing loan, for commercial loans, automobile loan, etc. What is their main source of money? Their capital is small capital. They do not pay from their capital. But mostly they fund these credits or borrowings from the fixed deposits, which is known as term deposit. That means we the people, common people of the country of 141 crore people, they provide the money to the banks in the form of fixed deposits. And what banks do? They invest this money or they fund this money in the form of borrowings, in the form of lendings to the various commercial organizations including individuals. But they cannot 100% invest, they cannot 100% lend it to the third party. They have to keep a certain percentage of their deposit, which is known as statutory liquidity ratio and CRR, cash reserve ratio with the Reserve Bank of India, and SLR amount is invested in government securities. In other words, if you invest or if you put 100 rupees as fixed deposit, bank cannot lend 100 rupees to an outsider. They can maximum lend 70 rupees. Balance 30 rupees approximately they have to invest in government securities, and a certain amount has to be kept with the Reserve Bank of India as cash reserve ratio. So now after COVID, there is a huge demand of loan or credit from the market. Now if I just try to give you the percentage that there is a growth in credit to the extent of around 18%. That means applications to the bank for sanctioning additional loan is being increased significantly and it is around 18%. Now you know what is the growth of fixed deposits? It is only 9%. That means market won 18 rupees, but fixed deposit holder are giving only 9 rupees. That there is a gap of another 9 rupees. So it is a demand supply. Demand is more than the supply. And you know the same old rule or economic theory which we have learned in our class, 8-9 class, that if the demand is more than supply, rate has to increase. So therefore, because of the enhanced activities, economic activities, and you must know that country is targeting to achieve 5 trillion economy against today 3.4 trillion by 27-28. And Morgan Stanley has opined that India will touch a total GDP of $8.5 trillion within a period of 10 years. That means by 32-33. If economic activities are increased, obviously borrowing requirement will also increase. And if borrowing requirement increases, bank need more and more money in the form of fixed deposits or term deposits. But if they do not increase the rate, if they do not provide the higher rate, why fixed deposit holder will put the money in bank? They will better put the money in various other instruments, maybe in securities, in stock market, SIP, etc., etc. So in order to attract the fixed deposit holders, according to my considered view and considering the inflation rate still at a higher pace, we are of the opinion or we are of the feeling that bank might further increase rate of interest on fixed deposits. And according to me, you will understand the positions probably in the first week of December 22, when Monetary Policy Committee will come out with the revised repo rate, which will be announced. Now, if you find that the repo rate is further increased from 5.90, say by 25 basis points, then almost you could be sure that its impact will be there on fixed deposits too. Maybe it will take another 10-15 days. Now, I have got certain question. I said I have now money with me and I cannot wait up to first week of December or January. I do not want to keep my money idle. Tell me what I will do. I said, you can keep this money in a short-term fixed deposit with the bank, maybe for 2 months or 3 months. You put this money in 2 or 3 months. Within 2 or 3 months, you will understand whether interest rate is increasing or not. If it increases, then you can utilize your maturity proceeds with the revised rate of interest. Another option could be, you take the deposits, you go ahead in taking new fixed deposits with the existing rate, and suppose you find that the rate has been increased as compared to the contracted rate today, then you can go for premature and put the money again back to the fixed deposits. There could be a question that if I go for a shorter period, then rate of interest will be small, maybe 2% or 3%. For them, I will further suggest that you take a fixed deposit for the full period with enhanced rate as applicable today. If you find that the rate of interest has been increased in the month of December or January, then you go for premature payment and deposit the entire amount under the new fixed deposit rate. You are not losing any money. So friends, it is a management. It is a management of our hard-earned money. Yeah, there are cases where the amount is in crores. So therefore, this may not be a significant issue where the deposit amount is limited in few lakhs. But where the deposit is in crores or 5 million or 6 million Indian rupee, it could be a significant issue. So therefore, we thought to come out with this video, which I am sure will be helpful to protect the investors, to protect the retired people, pensioners, and even the young employees, so that they can stop any sort of revenue leakage at their end. My request is that please subscribe our channel, enabling us to come out with such relevant videos from time to time. Thank you.